Hello, and welcome to this week's Click Trading Education Weekly Market Newsletter for the week ending the 29th of May 2026. Over the next few minutes, we'll break down what happened across the financial markets, identify the biggest movers, explore what's driving price action, and look ahead to the key economic events that could influence trading opportunities next week. As always, this is educational content only and should not be considered financial advice. Let's get started. This week was characterised by a clear divergence across asset classes. Equity markets continued their advance, led by strength in the technology sector. The Nasdaq gained almost 2.5%, making it the strongest major index of the week. The S&P 500 also pushed higher, supported by positive earnings results and continued investor confidence in AI-related themes. Meanwhile, commodities faced pressure. Crude oil fell nearly 7% as traders became increasingly concerned about slowing global demand and excess supply conditions. The VIX, often referred to as the market's fear gauge, dropped more than 9%, suggesting investors were comfortable taking on risk. In simple terms, investors were buying growth and technology while reducing exposure to areas linked to economic slowdown concerns. Several standout moves caught traders' attention this week. Palantir surged almost 15% following strong earnings and continued enthusiasm around artificial intelligence applications. Microsoft gained just over 8%, supported by strong cloud growth and further evidence that demand for AI infrastructure remains robust. On the other side of the ledger, crude oil suffered a sharp decline as growth concerns weighed heavily on the energy sector. Bitcoin also struggled, losing more than 3.5% amid broader weakness across digital assets. One important reminder here: strong price moves often attract traders emotionally, but discipline always beats excitement. Low volatility environments can encourage complacency, and chasing extended moves is rarely a high probability strategy. Interestingly, there were no major economic data releases driving markets this week. Instead, earnings season became the dominant catalyst. Company-specific results, particularly in the technology sector, had a greater impact on market direction than macroeconomic news. Central banks were relatively quiet. There were no significant surprises from the Federal Reserve, the European Central Bank, or other major policymakers. This allowed traders to focus on company fundamentals rather than interest rate speculation. At the same time, weakness in oil and crypto suggested underlying concerns remain about global growth. So while equity investors appeared optimistic, caution is still visible beneath the surface. From a technical perspective, the major stock indices remain in established uptrends. The Nasdaq continues to lead, while the S&P and Russell maintain positive momentum. Gold remains supported by a softer US dollar and continues to hold near higher price levels. Silver, however, is showing weaker relative strength, creating a divergence that traders should monitor closely. In cryptocurrencies, the picture remains corrective. Bitcoin, Ethereum, and other major digital assets continue to struggle for direction, with no clear signs of a significant reversal at this stage. In the currency markets, dollar weakness helped support pairs such as euro and Australian dollar. Meanwhile, JPY remains structurally strong due to ongoing interest rate differentials between the United States and Japan. Overall, the technical picture remains constructive for equities, but mixed across other asset classes. Next week shifts the focus back toward macroeconomic data. Several important reports could influence market expectations around inflation, growth, and interest rates. On Monday, traders will be watching the US ISM manufacturing PMI. This report provides insight into industrial activity and business confidence. Wednesday brings Eurozone CPI inflation data, which could influence expectations for future European central bank decisions. Thursday's initial jobless claims report offers another snapshot of labour market health. And then we arrive at Friday's headline event, the US non-farm payrolls report. This remains one of the most influential economic releases each month and often generates significant volatility across equities, currencies, bonds, and commodities. If you're actively trading next week, this is a date that should already be marked in your trading plan. Let's finish with 5 practical takeaways for traders. First, follow the leaders. Technology remains the strongest area of the market, and relative strength often matters. Second, stay alert during calm markets. And low VIX doesn't eliminate risk. Historically, periods of low volatility can sometimes precede sharp moves. Third, keep the macro picture in focus. Next week's inflation and employment reports have the potential to shift sentiment quickly. Fourth, avoid chasing price. Strong performers such as Palantir and Microsoft may continue higher, but disciplined entries remain essential. And finally, exercise caution in crypto markets. The sector remains under pressure and risk management should remain the priority. Before we wrap up, let's quickly revisit the key events for the week ahead. Monday, ISM manufacturing PMI. Wednesday, Eurozone CPI. Thursday, initial jobless claims. Friday, non-farm payrolls. These events have the potential to move markets significantly, particularly Friday's employment report. Preparation always beats reaction. Know when the releases occur, understand the possible impact, and ensure your position sizing reflects the additional risk. As we move into June, markets remain heavily influenced by sector rotation, economic expectations, and investor sentiment. Technology continues to lead, but leadership can change quickly. Remember that low volatility is not the same as low risk. Stay focused on your process, manage risk carefully, and avoid letting headlines dictate your decisions. At Click Trading Education, we believe that long-term success comes from preparation, discipline, and consistency. Process over prediction, discipline over FOMO, preparation over reaction. Thank you for watching. If you found this update useful, please like, subscribe, and share it with other traders who may benefit. Have a great trading week, and we'll see you in the next market updates.